Hello, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the dollar versus Canada as traders prepare for the Bank of Canada rate decision tomorrow. So let's get started. I'm going to focus on the 4-hour chart. What we've seen over the last week or so of trading is that initially the price based against the 100-bar moving average on the 4-hour chart. After trading above and below the 200-bar moving average right through here, we finally saw some upward momentum toward the end of last week. And in trading this week, we've seen a continuation to the upside for this currency pair. Of course, we have the Bank of Canada rate decision that's going to be taking place tomorrow morning at 9:45 a.m., followed by the press conference at 10:30 a.m. The market is pricing in a 25 basis point cut, but there are some that think that the Bank of Canada might keep rates unchanged until September to get a better view of inflation. I think J.P. Morgan came out with that comment yesterday, and you can find it on our website. But that puts a little doubt into whether or not the Bank of Canada will indeed cut rates, and so that could be a volatile time period tomorrow at 9:45. If they do choose to not cut. Now, the other thing that's moving the Canadian dollar lower is oil prices. Oil prices are down around 8% over the last 4 trading days, or 4 consecutive days to the downside. So that's a big move to the downside as well, which also tends to weaken the Canadian dollar. Technically speaking, this move to the upside was able to extend above this swing area through here. That swing area encompasses a number of different swing lows and highs going back in time. What is key from a technical perspective is you see this little low right here after moving higher yesterday and coming back down to the high of this swing area. The buyers leaned against that level and forced the price higher. Now, we haven't been able to extend above the high price from yesterday's trade, just coming right up to it. So there is some reluctance to go higher. But if we do get above that level, we'll be looking toward this swing area up through here. Now, most people who have heard any of my Dollar Canada comments over the last few weeks know about this red box. This red box encompasses all the ups and downs that have occurred over this currency pair going back to the month of April. Yes, there was a little move to the upside right through here that failed, but I'm going to be using this level, this area, as the level that if we get above, I think we go and take out the high price at the year's high price of 138.4448, or that would be certainly in the cards for traders on a break of this up and down trading range. It wasn't but just 2 weeks ago that the price came down, tested the 38.2% retracement of the move up from the December low to this high price right here. Whip goes back here, and that was the second or third time the price had tested that 38.2% retracement. And so despite moving below the 100 or 200-day moving average right here, holding at 38.2% retracement, got the ball rolling to the upside. So the buyers are definitely making a play here. I'm not surprised with oil prices moving lower and the Bank of Canada expected cut rates, but we'll see how that all plays out and whether or not we can get out of this red box of trading here tomorrow. That's going to be the key. If we do see rotation back down below the 137.34 level, this level right through here, then I would expect that the buyers give up on the failure to get to and through the red box. My name is Greg Michalowski with the Forex Quick Look at the dollar versus Canada. Good fortune with your trading. Bye-bye now.